I'm now to take a look at the day's business news, and our business editor Stephen Carroll is with us in studio. Stephen, I imagine we're going to start with that very turmoil picture on the markets.
Exactly, and this time it is the technology sector that is causing the global markets to tumble. Investors now afraid that this key industry, which has really been one of the main drivers of global growth in recent years, is facing the prospect of greater regulation after the Facebook data scandal. Now, the issue has rattled global markets. We'll check in first on what's happening today in trading in Asia. Falls across the board, as you can see. It is the technology sector again that is driving many of those falls. The Nikkei in Tokyo down 2%. Two of the biggest fallers that we're seeing in Asia today are the Chinese internet company Tencent. Their shares down over 2%. And Samsung, which is one of the main players on the Kospi and Seoul, they're down over 2% as well. So it's spilling from those American technology giants into Asia as well. But these markets were taking their cue from Wall Street trading on Tuesday. The Nasdaq index, which is where most of the main big technology brands are listed, they saw the heaviest losses there, down nearly 3%, but the knock-on effects being felt elsewhere too. Now, when we talk about technology shares, we often use the acronym FANG. Facebook, Apple, Amazon, Netflix and Google. They all had a bad day on Tuesday. Pressure continuing to mount on Facebook. And we've also taken a look. So we see Facebook shares, they're down almost 5%. Amazon seeing falls too. Google down 4.5% too. But we're also including Twitter in this list, and that's because their shares fell by 12%. This was after an investor report said that there was looking at what the implications of changes to privacy rules could mean for their business, and certainly investors taking fright at that piece of advice. Well, we know that Facebook has been at the centre of this particular firestorm. There are reports now saying that Mark Zuckerberg, the chief executive, is willing to testify before the US Congress over the data harvesting scandal. But it's been a brutal 10 days for the company's shares. Before this scandal broke, Facebook shares were trading at over $185 a piece. After yesterday's slump, as we saw, almost 5% down at $152. So it really is a huge change to the company's share price. Almost $100 billion wiped off the value of the world's biggest social network. This scandal isn't over. The company is facing multiple inquiries in the United States and in Europe, as Anka Ula now reports.
Pressure from all sides. Facebook CEO Mark Zuckerberg must find a way to fix the company's biggest crisis yet, and fast. He has 2 weeks to answer the European Union's questions about the Cambridge Analytica data leak. And on Tuesday, he refused the UK's request to appear before a parliamentary committee investigating the scandal.
We believe, given the serious nature of the allegations that have been made around the access and use of Facebook user data, that it is appropriate that Mark Zuckerberg should give evidence to the committee.
Zuckerberg had offered to send one of his deputies instead, an offer the committee urged him to rethink. Facebook is under fire from both sides of the Atlantic. Zuckerberg's been called to testify before the U.S. Senate's Judiciary Committee, and the Federal Trade Commission launched an investigation into Facebook's privacy practices. Meanwhile, the potential impact of the data breach is expanding. On top of Donald Trump's election campaign in the United States, the whistleblower at the heart of the scandal told British lawmakers Facebook's user data was likely also used by the official campaign backing Britain's exit from the EU.
I think it is completely reasonable to say that there could have been a different outcome in the referendum, had there not been, in my view, cheating.
Christopher Wiley says the British company Cambridge Analytica and Canadian company Aggregate IQ used Facebook's user data to influence elections. Both companies have denied this, while Facebook says it wasn't aware the data were being used in this way.
Now, it wasn't just social networks that saw falls on trading on Tuesday. We also saw slumps in companies related to self-driving cars. The worst performing company on the S&P 500 index on Tuesday was the chip maker Nvidia. Now, it announced that it would stop testing its driverless car technology following that crash involving an Uber car in which a pedestrian was killed in Arizona. The suspension affects its own fleet of cars, which are being driven on roads in California and New Jersey. But Nvidia's technology is used in most self-driving prototypes, so it's a big impact for the industry. Now, that news sent the company's share price down almost 8% in trading. It wasn't a good day either for Tesla shares. Their shares down 8% too in trading. That was after the US Road Safety Authority announced that it was investigating a crash in California last week to see whether or not the autopilot system in the car had been engaged. So plenty of uncertainty around for those companies. Well, meanwhile, other operators in the self-driving market are pressing ahead with their technology. Google's Waymo is adding Jaguar Land Rover's electric SUV, the I-Pace, to its fleet. Now, under the deal, JLR will supply up to 20,000 cars as part of this deal. It's a step in Waymo's plan to roll out a robo-taxi service in the United States. Testing of the I-Pace is set to begin later this year. Well, finally, for me, in a day where we're talking about a lot of shares plummeting, one company that's having a very good day in Hong Kong. It's the digital media firm Most Kwai Chung, and it's seen its shares surge 880% on its first day of trading. The firm owns a popular satirical magazine called The 100 Most. It features 100 short entertainment articles targeting younger readers. They also have a website called TV Most that has 1.2 million fans on Facebook. Its digital advertising business provides more than 90% of the company's revenues, a really big boost in a time. Of course, we're talking about squeezed margins for media companies and how they make money. Seems like there's a company in Hong Kong that has the answer.
A jump of 880%. I do wish I had seen that coming.
How rich we could have been.
I know, Stephen. Every morning I feel I'm thinking the same. Eventually we'll get there. Thanks a lot, Stephen Carroll, for that business update. Well, now we're going